In this video, I'm going to unveil a new LuxAlgo strategy that predicts 100% accurate market reversals. This powerful technique works across all trading markets, whether you're into cryptocurrencies, stocks, or Forex. We're diving deep into the realm of price action trading. And there's another essential element to this strategy, the Fibonacci retracement tool, specifically the golden pocket, the sweet spot for major price reversals. By the end of this video, you'll have the tools to confidently spot key opportunities in any market and take your trading to the next level. Before we dive deeper, LuxAlgo is running their biggest Black Friday sale ever. You can get up to 65% off their Ultimate Plan, but only Ultimate Plan members get exclusive access to their brand new AI product, a tool so genius no other provider in the market comes close to offering anything like that. You can upgrade or extend your Ultimate Plan up to 3 times. With the sale, the new price is less than $1.40 per day. That's less than the cost of your daily coffee, but it gives you the power to revolutionize your trading. Seriously, this is probably a once-in-a-lifetime chance, so you need to make sure to act now before the sale ends, and use my special link to secure this incredible opportunity. Alright, let's get into it. By the way, I've put this strategy to the test 100 times on the Solana 6 minutes chart. By the end of this video, I'm going to share the full breakdown of my trading results. The strategy includes 2 indicators only. In order to add the first one, click on the Indicators tab and search for LuxAlgo sessions, and click this one to add it to your chart. Now let's customize this indicator by clicking the settings. For this strategy, we only want to use session A, so make sure to disable everything except for the first session and the range option. You want to use the time from 8 a.m. to 7 p.m. We'll be using this session indicator to pinpoint the low and high points of the market. We'll especially focus on the sweeps of these levels, as they will serve as our first entry condition. This approach will help us identify the most opportune moments to enter the market. Now that we understand how this indicator works, let's add our second indicator to our chart. For the second indicator, we want to search for LuxAlgo price action concepts and click this one to our chart. Now we need to customize our price action indicator. For this strategy, we're only going to be using the change of character labels and the fair value gaps, so make sure to disable everything else like volumetric order blocks. And now scroll down and change the label size to increase its visibility. Before we dive into the trading rules, let's first explore the logic behind using change of character labels and fair value gaps. A change of character, or CHoCH, sometimes also referred as market structure shift, is characterized by price breaking a prior swing low during an uptrend, which will then give us a bullish CHoCH, or a prior swing high during a downtrend, which will then give us a bearish CHoCH, and thus indicates a potential market reversal. The Price Action Concepts Toolkit labels 2 distinct types of CHoCHs, the leading CHoCH and a supported CHoCH. We're going to be using both types for our strategy. Fair value gaps, or FVGs, are market imbalances formed from a sequence of 3 candles where the outer candle wicks fail to overlap the central candle body. The range between the wicks highlight a fair value gap. Bullish fair value gaps occur when the current price low is higher than the price high 2 bars ago. Bearish fair value gaps occur when the current price high is lower than the price low 2 bars ago. We will be using FVGs to spot the best possible entry points, ensuring our trades are timed for maximum precision. Now onto the fun stuff. Let's delve into the trading rules to understand how we can use this strategy profitably, and let's first start with the rules to enter a buy trade. To take a buy trade, we need to make sure 3 conditions are met. Let's go through each one step by step while I show you exactly how it looks on the chart. First, we need to see the previous session low being swept. To do this, we'll draw a horizontal line at the session low so we can clearly see when the price breaks below it. Now, looking at the chart, we can see multiple candles moving lower, confirming that the session low has been swept. Perfect. With our first condition met, let's move on to the next step. Next, we need a bullish change of character label to appear. A few candlesticks later, there it is. A bullish CHoCH label has printed on the chart. I'm quickly adjusting the label's size and color for better visibility. There we go. Now that we've confirmed the bullish CHoCH label, it's time to check for the third condition. Finally, we need to see a bullish fair value gap form below the current price action at the same time the CHoCH label appears. On the chart, we can clearly spot an FVG. This is where we'll set our limit buy order, right in the middle of the FVG. Now we just need to wait for the price to reach our buy order. A few candlesticks later, our limit entry is triggered. Now it's time to set our targets. We'll draw a Fibonacci retracement from the entry price to the previous session high. For the levels, we'll use 0.618, 0.66, and negative 0.272. The stop loss will be placed at the negative 0.272 level, while the golden pocket zone between 0.618 and 0.66 will be be our target. Once the trade is active, we simply wait for the price to reach our target in the golden pocket zone. Watching the chart, we can see the price steadily moving in our favor, and finally, it hits the target. This trade resulted in a 1 to 2.39 risk-reward ratio and captured a 2.8% price move, a very nice result. For another buy trade opportunity to be recognized, we need to confirm 3 key conditions. Let's go through each one step by step, and I'll show you exactly how it unfolds on the chart. First, we need the previous session low to be swept. To identify this, let's mark the session low on the chart by drawing a horizontal line. Once that's done, we can clearly see multiple candles breaking below this level. This confirms that the session low has been taken out. With this condition met, we're ready to move on to the next step. The next thing we're looking for is a bullish change of character label to appear. A few candlesticks later, we can spot the bullish CHoCH label on the chart. Perfect. Now that the bullish CHoCH label is confirmed, we can check for the third and final condition. Lastly, we need a bullish fair value gap to form just below the current price action when the CHoCH label appears. Here, we can see a clear FVG forming, and this is where we'll place a limit buy order in the middle of the gap. Now, we just wait for the price action to retrace and trigger our entry. After a few more candles, our limit order is filled. Next, we draw a Fibonacci retracement from the entry price up to the previous session high. The levels we'll use are the golden pocket and the -272 level. Our stop loss will go at the negative level, and the golden pocket zone will serve as our target. Now, with the trade active, we wait to see how it plays out. Watching the price action, we see it steadily climbing and finally hitting the target. This trade resulted in a 1 to 2.35 risk-reward ratio and captured a 1.4% price move. Another excellent trade. And the exact opposite is true for entering sell trades. To take a sell trade, we need to make sure 3 conditions are met. Let's go through each one step by step. First, we need to see the previous session high being swept. To do this, we'll draw a horizontal line at the session high so we can clearly see when the price breaks above it. Now, looking at the chart, we can see multiple candles moving higher, confirming that the session high has been swept. Perfect. With our first condition met, let's move on to the next step. Next, we need a bearish change of character label to appear. A few candlesticks later, there it is. A bearish CHoCH label has printed on the chart. Now that we've confirmed the bearish CHoCH label, it's time to check for the third condition. Finally, we need to see a bearish fair value gap form above the current price action at the same time the CHoCH label appears. On the chart, we can clearly spot an FVG. This is where we'll set our limit sell order, right in the middle of the FVG. Now we just need to wait for the price to retrace and trigger our sell order. Here, our limit entry is triggered. Now it's time to set our stop loss and target. We'll draw a Fibonacci retracement from the entry price to the previous session low. For the levels, we'll use 0.618, 0.66, and -0.272. The stop loss will be placed at the negative level, and the golden pocket zone will serve as our target. And now we simply wait for the price to reach our target in the golden pocket zone. Watching the chart, we can see the price steadily moving in our favor, and finally, it hits the target. This trade resulted in a 1 to 2.39 risk-reward ratio and captured a 1.5% price move, a great example of the strategy's effectiveness. Alright, let's take a look at another sell trade example. For the first condition, we need to see the previous session high being swept. To identify this, we'll draw a horizontal line at the session high so it's clear when the price pushes above it. Now, as we look at the chart, we can see multiple candles moving upward, confirming the session high has been taken out. That completes our first condition. Now let's move to the next step. The second condition is to spot a bearish change of character label on the chart. A few candlesticks later, we see the bearish CHoCH label appear. With this confirmation, we're ready to move on to the final condition. For the third condition, we're looking for a bearish fair value gap to form above the current price action when the CHoCH label appears. On the chart, we can easily spot an FVG forming. This is where we'll place our limit sell order, right in the middle of the gap. Now we wait for the price to pull back and trigger our sell order. A few moments later, our limit entry is triggered. Next, we set up our stop loss and target. We'll draw a Fibonacci retracement from the entry price to the previous session low. The stop loss will be placed at the negative level, while the golden pocket zone will serve as our target. With the trade active, there's no need to worry worry about the price revisiting our entry multiple times. We've already set our stop loss and target. All we need to do is patiently wait for the price action to reach our target. While this trade plays out, we can shift our focus to analyzing other assets or setting up new trades. Eventually, the price makes its way to the target, completing the trade successfully. Alright, this trade achieved a 1 to 2.39 risk-reward ratio and captured a 5.5% price move, proving it was well worth the time waiting. Okay, at the beginning of the video, I promised to show you the backtesting results, and now it's time to deliver on that promise. I've tested this strategy 100 times manually on the Solana 6 minutes chart, and here are the results. I started with a $1,000 account balance. I use 10% of my account per trade, adjusting as my balance changes with each win or loss. For example, if I profit $100 on a trade, my new balance becomes $1,100, and I use 10% of this updated balance for the next trade. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.